It's a pleasure to welcome you today to Stanford University. It is our last event of the year for the Rock Center, and it is a great turnout, and it's great to finish up on this note. My name is Evan Epstein. I'm the Executive Director of the Rock Center for Corporate Governance, which is a joint initiative between Stanford Law School and the Stanford Graduate School of Business. A few months ago, I was talking to Joe Grundfest, Nancy Siliano, and Amanda Packel about Bitcoin, and we decided to host an event on this topic due to the highly controversial and novel nature of Bitcoin, and the growth of the market since then has been phenomenal. It's now valued at $12 billion, and all of you are here because you find it a fascinating topic. The idea of this session is to discuss questions such as what is a Bitcoin? Is it a currency? Is it a commodity? Is it a security? What laws apply to Bitcoin? What regulators should be involved, if any? What about frauds in this market? Is it a bubble? What about its pricing? Congress hearings, China question last week. So there's a lot to Bitcoin, and we are very happy to host this discussion. This discussion actually is an hour and a half. It's longer than our traditional events, and we suspected that it was a longer topic than just our regular topics. So to discuss the evolution of the Bitcoin market, we have assembled, we think, a unique panel of experts, and we hope to have this great discussion. I will make only a brief introduction of the speakers so that we can dive right into the topic. First, we have Russell Brumer. He's a partner at WilmerHale's Regulatory and Government Affairs and Transactional Departments in Washington, D.C. He is also a former general counsel of the CIA, so he brings a lot of expertise in the legal and regulatory domain. We also have Fred Ersham. He's a co-founder of Coinbase, which is a leading digital wallet that allows you to buy, use, and accept Bitcoins. David Kinitsky is the general manager of the Bitcoin Investment Trust from Second Market. And the Bitcoin Investment Trust is an open-ended trust that is invested exclusively in Bitcoin and derives its value solely from the price of Bitcoin. And it enables investors to gain exposure to the price movement of Bitcoin without the challenges of buying, storing, and safekeeping Bitcoins. We also have Nick Shalek, who is an investor at Rembe Capital, a VC fund focused on changing the world of finance, and they have a very strong stake in Bitcoin. So as you can see, what we wanted in this panel is to have investors, entrepreneurs, and also regulators, and people that are in this world on a daily basis. Finally, to moderate this panel, we have Joe Grundfest. He is the William Franklin Professor of Law and Business at Stanford Law School. He's also one of our senior faculties of the Rock Center for Corporate Governance. He is also a co-founder and director of Financial Engines and a director of KKR. He's a leading voice in corporate governance. And before joining the faculty at Stanford Law School in 1990, he was a commissioner of the SEC. So having done this introduction, I'll hand it off to Joe, and we look forward to this great discussion.
Great, thank you, Evan. We've got a terrific panel over here. We've got a lot. My guess is we've got a tremendous amount of interest and questions. What we're going to do is we're going to start by just doing about a half hour in the aggregate of presentations from the panel. We're going to try to exert a little bit of self-control. We're each going to try to limit ourselves to about 5 minutes. Fat chance of that happening. We're then going to have a dialogue amongst the five of us where we're all going to be going back and forth. We plan on that being no more than a half hour. And then we want to get to questions from you. We want to get to the questions from the audience. It's our suspicion that there'll be lots of questions from many of you. And one of the reasons why we're here is to try to be as responsive as possible and to try to get as many of these questions answered as we can. But before we get started, what we'd like to do is a real informal survey. All right? For those of you in this room who actually have Bitcoins, and there's no way that we can audit, all right, the answer to this, all right, which is one of the interesting things about Bitcoins. For those of you who have Bitcoins or think you have Bitcoins, all right, we'll get to that point, all right, in just a second, please raise your hands. All right, what would you guess? Is that 20%?
20%.
Yeah. About 20% of the room. Yeah. Okay. The over-under among the panelists was something in the range of 20 to 30%. All right, that was the bet, and we came in at the low end of the range. And this is, by the way, if you just look at the percentage nationwide of people who own Bitcoins, This is a huge overrepresentation. In case you're curious, all right? It's really remarkable. We have a very, very atypical room here, and I think we should all remember that. All right, so with that by way of introduction, we now know a little bit about you. You know more about us. Fred, why don't you kick it off? Why don't you tell us what Coinbase is and your views on Bitcoin?
Sure, absolutely. So views on Bitcoin could go on for God knows how long, so maybe I'll reserve that part of it. So Coinbase is the largest United States Bitcoin platform. And when I say platform, I mean sort of three primary things. One is to make it easy for the average consumer to use Bitcoin. So that means link any U.S. bank account and start buying or selling Bitcoin in a way that looks very similar to PayPal. Sorry, can you not?
You're on red.
There's microphones don't work in the room. This is just for the feed.
Gotcha. Okay. I will project then. The second element of that is a Bitcoin wallet. One which we've taken great care to design such that it kind of looks like some combination of Gmail and your online banking, something that's very easy to use. The other piece embedded in that naturally is storing your Bitcoin is a very non-trivial problem for the average person, so we take care of and abstract away the security aspect of that. The second major pillar of this, if you will, is merchant tools. So this looks very much like if you've ever checked out with PayPal online. It looks very similar to that, except the underlier is Bitcoin. And one of the key features there is if you're a merchant accepting Bitcoin, you can lock in the exchange rate between Bitcoin and your local currency, mostly the dollar, at the moment instantly, such that you don't experience risk related to the exchange rate. That is sort of, I feel like, where the next wave of Bitcoin adoption is going. You think about these, taking sort of a high-volume electronics retailer online, for example. They might accept credit cards and pay between interchange fees and chargebacks somewhere in the realm of 2.5% to do so. Bitcoin can bring that much lower at the moment to 1% or even 0. In aggregate or in net rather, reducing their payment costs drastically and increasing their profit on a given sale by about 50%. The final piece to all this is creating a developer platform. So there are many things in Bitcoin that require a lot of groundwork to be laid. Bitcoin itself, like SMTP for email, is a low-level fundamental protocol which is non-trivial to build on top of. By no means impossible, but non-trivial. So create an easy-to-use API to build on top of that. I'm sure we'll get into some of this, but there are legal and regulatory concerns associated with Bitcoin. And it's much easier to have one player as a platform sort of create a layer on top of which others can build rather than replicate that infrastructure. And the final piece of this is sort of the connections to the traditional financial and banking world. So Coinbase is the only company in the United States at the moment that has been able to maintain a banking relationship in the U.S. to the extent, or anywhere near the extent that we have. And that has obviously helped us in the market quite a bit, and we've had to do a lot of work on sort of the compliance front to maintain that position. But again, that's something else where it's very advantageous for a new developer coming along looking to build something on top of Bitcoin to come and build on top of us rather than recreate. So that's what we do at Coinbase.
David?
So I'm David Knitsky. I'm at Second Market, and we recently incubated and launched the Bitcoin Investment Trust. If you're not familiar with Second Market, our wheelhouse has really been finding emerging new asset classes, underserved asset classes, and helping develop infrastructure, services, and just making them more investable. And really playing the role of working with the folks who are in that asset class, the entrepreneurs, the visionaries, and bridging the gap between the traditional, professional financial world, if you will. Obviously, the basis of Bitcoin some time ago was really a lot of kind of anarchist kind of crypto hacker, this persona, and that's been changing more and more recently. And so one of the things that's necessary for it to grow is to start talking to the regulators and the powers that be, so to speak. And so what we're doing is focusing our efforts on bridging the gap to professional investors, and we've done that with the pre-IPO private shares market, Facebook, Twitters of the world, also the fixed income world, most notably the auction rate securities market when that seized up, developing a protocol for getting some liquidity there as well. And so what we've done here is, folks at Second Market have been interested in Bitcoin for some time, and we finally got our board to say, yeah, you guys can go ahead and do something this year. And so we thought the first step would be to develop the Bitcoin Investment Trust, which is structured similar to the SPDR GLD ETF. However, it's not an ETF. It's in the private sphere. It's not on an exchange. But structurally, in terms of how it's set up, it is. And it's audited by Ernst & Young. Sidley Austin was the counsel in structuring it. And what we're doing there is developing a lot of things that we're missing for professional and institutional investors to get exposure to Bitcoin. It's, if you're a developer or in the tech space, you might take it for granted, but a lot of folks find it kind of challenging to have to figure out how to buy a Bitcoin, how to store a Bitcoin, and then they have, auditing concerns. How do you prove title? How do you, work with your accountant to bring it into your assets? And so what we've done is basically the trust holds Bitcoin and issues shares that are just securities, similar to an ETF. And that we've seen major excitement amongst three core groups. The first being tech entrepreneurs, the second being principals at Wall Street firms, and the third one being family offices, multi-family offices, and ultra-high net worth individuals. And so we launched September 25th, and we're at net assets in the neighborhood of $60 to $70 million, depending on the day. Obviously, some of that is due to the price increase, but raising capital, $20-25 million already, even though we've not even begun real sales efforts yet. And I guess that's the spiel for now.
Nick?
Great. I'm Nick Shalik. I'm an investor at a firm called Ribbit Capital. We're a Palo Alto-based venture firm. And what we do, we're dedicated exclusively to investing in financial services companies, people doing the most disruptive things in the financial services world. And Bitcoin has become, over the last 18 months, a very big part of that, of what we're doing. I think today we're probably the largest investor by dollars, certainly by time, in the Bitcoin space, with a lot of other people coming in. So it's an exciting time in the Bitcoin world for us. So I guess I'll use my time to try to give a little bit of backdrop on why we think Bitcoin is a really revolutionary, important new technology. If you think about the last 15 years and what we've seen in other sectors of the economy, open internet-based software and protocols have really changed a number of industries in profound ways. So think about media, communications, commerce. We've seen enormous disruption and a lot of value change hands. For a variety of reasons, we haven't really seen this in financial services. A lot of that has to do with regulation, with industry structure. So you have geographically specialized, highly vertically integrated structure across a lot of financial services players. And that has tended to lead to less innovation. So if you look at financial services, compared to other major industries, much larger percentage of it is still offline. More than 95% of financial services transactions of various different types are still offline. And Bitcoin, in our view, and the move to the creation of decentralized cryptocurrencies or protocols for money or distributed ledger system, these are all ways people describe what Bitcoin and its sort of brethren are, has the ability to upend that. So I guess I'll try to give you a sense of some of the ways in which money is broken today. And some of these, I think, be intuitive to you guys. Like today with Skype, or we can talk to somebody virtually free and instantly on the other side of the world. But if we want to send a cent or $1,000 or $1 million to them, it's costly and time consuming. Typically it'll take several days and cost us a percentage of the transaction. In a lot of parts of the world, it's harder for people to buy a phone to buy an app on a phone that costs $1 or $2 than it is to buy the phone itself. There are billions of people in the world who today have access to the internet but don't have bank accounts. There's an enormous, tens of billions of dollars So $8 billion last year alone in credit card fraud. So huge cost to the system. And Bitcoin, we'll have, I think, a lively debate tonight about what Bitcoin is exactly. But without getting into that, I think we can, I would say it has enormous potential to be a useful store of value to lots of people around the world, to have meaningful impact on fraud, friction, and cost as a payment system. And I think most excitingly for us, as a protocol or as a distributed ledger that's accessible to anybody in the world, it can enable permissionless innovation, and that's something that Fred was talking about a little bit before. But the ability for entrepreneurs to build something on top of an open system where they don't have to go and ask permission to a huge number of gatekeepers that currently exist in the financial services world. So the last thing I'll say is, if you read the press, or I think we all have a tendency to try to compare something new to something that exists. So sure, we'll talk tonight. Is PayPal more like, is Bitcoin more like PayPal? Is it gold? Is it a currency? Is it a store of value? Exactly what it is. You can make analogies to all of those things, but it's really something new, and we should treat it as something new and recognize that it will cause new behaviors in the future. So just like email is not really mail. I mean, there are some analogies between email and mail, but the creation of email, and the protocol that underlies it, SMTP, has changed the way we communicate it in profound ways and caused us to do many things we never used to do in the future, even while mail has continued to have its purpose. So my excitement, our excitement at Rembe about Bitcoin is the ability to drastically change the world's largest industry, which is sort of $7 trillion financial services space.
I notice you didn't say anonymity as one of your goals.
No? Anonymity is an important feature of the protocol for some people, but I don't think ultimately in its end state Bitcoin is about anonymity. It is about privacy.
I jumped the gun. I'm sorry, Russ?
Thanks, Joe, and thanks for having me for this session. I feel like I should start by saying, hi, my name is Russ, and I'm a lawyer.
There you go.
Now that I've gotten that out, we can go from there. I realize that to some people, as you were saying, some of the people who really pushed Bitcoin into the forefront will think that what I'm about to talk about is an anathema, that Bitcoin should just exist out there, and it should be purely peer-to-peer, and there shouldn't be any regulation, and there shouldn't be any worry, and gosh, then who do you go to if your Bitcoin gets stolen by some hacker? But we did a webinar at our firm about 2 months ago, and we've been watching it for a long time before that, but what's happened in the last 2 months is just the ubiquity of Bitcoin. There was an article in Time magazine a couple years ago about the deep web, and what it really was about was the Department of Justice taking down the Silk Road and its founder, which I'm sure many of you read versions of that, but it was, thought, well, okay, that's an interesting thing for Time. I was flying out here, I took my latest Time. It's the one magazine I still get in hard copy because it really is about you can read it in length of the shuttle from Washington to New York, and it's more interesting than anything else. But I opened it up, and there's a roundup of what can you buy with your Bitcoin. And it's just one of these little blocks. It's going to be, when Time magazine starts covering it, you know something has happened. I also got a call from my daughter last Friday who called up and said, Dad, did you know you can buy real stuff with Bitcoin? And she's a college senior. I said, yeah. She said, I just walked by a Subway shop.
Just wait till we take it for tuition payments.
Well, that's there.
Then you know
There is a university in Cyprus that's doing that.
Yes, but there's a reason why they're in Cyprus.
That's right.
It's a very important point there.
I will say I've got 3 kind of contextual points I want to make, and then a couple of things about where at least the regulation is going so far. Contextually, I'm actually delighted to see so many fellow baby boomers in the room, because I'm going to say, while Bitcoin is unique and it can do things that have never been done before, it's not the first financial innovation that has stymied us. I mean, as I can tell some of you, I can remember the first ATM machine I saw. And the story is that Citibank first tried to put ATMs out in the late 60s, and they canceled the program because people wouldn't use them. And later on, they came out, but it really wasn't until the late 70s or 80s. And then the bank regulatory people had to figure out, well, what is this thing? And, you know, it's a machine in a hole in the wall in the bank, and all of them were attached to bank buildings initially. You didn't have them out in the convenience stores and places, bars and whatnot. That level through the 80s and 90s. Mortgage-backed securities can only exist because there are computers capable of aggregating all the data that you need. But when they came into being, the regulators couldn't figure out what to do with them. And so there was some back and forth for about 5 or 6 years that I was part of. You get into the 90s, computerized banking. I came back from an assignment in the government, the CIA assignment in the government. One of the first things I got asked was, well, if you can do banking from the computer on your desk, because there were no laptops then, they were all desktops, doesn't that make your computer a branch? And they had to struggle with that. And you go through internet banking, through the payment services that have developed like PayPal, now into mobile payment apps and Bitcoin. Technology always leads, and the regulators then have to figure out how to either fit it into a system that wasn't meant for the technology, or they have to sit down and go through and say, okay, we've got to do the rulemaking and all the things that go with that. And so I think that's where we are right now with Bitcoin. The first thing the regulators also say is, how do we characterize whatever this is? We've heard it before. Is this currency? Well, sort of, but not exactly the way the commercial goes. Is it a commodity? It's got some aspects that are like commodities. It floats in value and based on a market rather than anything that's intrinsic to it, but it's not exactly a commodity. Is it a security? Joe's going to talk about that in a minute. But you go, well, the Bitcoin itself maybe is and maybe isn't, and the chairman of the SEC has said it's facts and circumstances. But as you said, once you start aggregating them into a pool and selling out shares in that pool, you really do have a security, and you have to treat it that way. So the two agencies that are farthest in front on this right now are FinCEN, the Financial Crime Enforcement Network, which has put out guidance back in May trying to figure out whether the various players in this are mortgage services businesses and, in fact, are money transmitters. And they would say clearly that this is not a currency. Their statute, this is the other problem we have, various statutes define these characterizations in different ways. So FinCEN would say very clearly this is not a currency, but it is a way to transfer value. They broke the world down into 3 buckets. There are users who buy a Bitcoin or acquire a Bitcoin and use it to pay for things. They clearly said those people aren't mortgage services business. But they've got administrators and exchangers. And in both of those cases, they said there is a strong likelihood that people who do that kind of the business of Bitcoin are in fact money services businesses. And if you are, and you don't register with FinCEN, you are subject both to civil penalties, $5,000 a day for every violation, but you're also subject to a criminal statute, 18 U.S.C. 1960, which makes it a crime to be a money transmitter without being licensed. If you have to do this, you have to have a formal anti-money laundering program. You have to keep records of the transactions. You have to report. You have to train your people, first of all, and you have to do monitoring. You have to currency transaction report for transactions that are over $10,000, and you have to file suspicious activity reports for transactions that don't look like they are connected to, quote, the legitimate business of whoever's doing this. I don't know how, I'm in the business of advising people. I don't know how you advise on what is a suspicious activity in this space at this point in time. Sort of mirroring that, there are a lot of states that require licensing if you're going to be a money transmitter. California is one of them, and California is trying to figure out how the various transmission engines should, or whether they have to register, and if so, how. New York is thinking about creating a separate license for Bitcoin participants, but they don't know quite what they're going to do with it. So that area right now, that is, I think, the farthest along in terms of regulatory, and I think it's the farthest along because of there have been so many reports of using the existing Bitcoin networks and exchanges, Coinbase excluded from that, to do illicit activities, to launder money, to do the things that you've been reading about in the paper. Which brings us to the Justice Department. The Justice Department, along with 4 federal law enforcement agencies, brought the first real case of interest, at least folks like me in May when they took down Liberty Reserve, which was a Costa Rican-based entity that performed, as best I can tell from what I've read, no Know Your Customer, KYC, no transaction review. I'm told that one of the customers of Liberty Reserve was named Mel Bogus, and when asked the purpose of his account, it was to pay for my cocaine, and his stuff just went straight on through.
But they knew their customer.
They knew their customer, right? Of interest there is that some of the founders and principals of Liberty Reserve had 5 years earlier entered a guilty plea for a company called eGold, which was based on similar use of gold for illicit activities. I think another is that 17 countries cooperated in bringing down Liberty Reserve, including Costa Rica, and that they have been charged both with conspiracy and the operation of an unlicensed money transmitter. And FinCEN used that case to some new authority. It has Section 311, which allows FinCEN to declare somebody to be a primary money laundering concern. And Liberty Reserve was the first Bitcoin entity that they put that slap on. I mentioned, and we'll just...
So hold on, let's be very clear. That was not Bitcoin related. Liberty Reserve and
Liberty
Bitcoin are two completely separate things.
I understand. That's right.
Okay.
They used the Bitcoin,
not
yes.
Bitcoin. They did not use Bitcoin.
Oh, they did not use Bitcoin?
No. It's a very common misconception.
And I am behind on mine. Silk Road, however, did use Bitcoin, and they got taken down in October. And again, I'm sure you've all read, so I won't go through it all, but as I read the coverage on that, it reminded me very much of the saloon scene in the first Star Wars movie. You better have your gun on kill and shoot first and ask questions later. We are seeing interest, which Joe's going to talk about, the SEC and the CFTC, which are trying to figure out, are these securities, are they commodities, are they future contracts, are they swap options, whatever. We are seeing some interest at the Consumer Financial Protection Bureau, which to the extent Bitcoin is sold to and used by individuals in their personal life, the CFPB has jurisdiction. They haven't asserted it yet, but they have it. And state regulators, I mentioned New York, which is looking at whether to have a special license for Bitcoin entities. State attorney generals are looking at this in areas of fraud or deception, UDAP kind of arguments. Fun thing about getting ready for this is, Joe, is much more like a spot the issue examination than having to solve anything.
There are no solutions.
Right, there are no solutions.
No, really, there are no solutions yet. That's great. Thanks, Russ. Let me just share a couple of observations. First, I think the question of Bitcoin or things that might follow after Bitcoin is extraordinarily important from a practical perspective and also from an intellectual perspective. There's a real need out there, and Bitcoin is, I think, an absolutely fascinating effort to respond to that need. And I think many of our panelists have underscored what that need is, and I can describe it as having three parts. Number one, the method that we use for transacting money is, to be polite, very 20th century. And it's much more expensive than it needs to be. If you think about the credit card mechanism as typically costing between 2 and 3%, that's the equivalent of a 2 or 3% sales tax that's imposed on the global economy. And wouldn't it be a great thing if we could take a 2 or 3% sales tax out of the system? All right? To the extent that Bitcoin attempts to do that, yippee-yi-yo-ki-yay. Why not try to make this work as much as we can? Also, people have concerns about the value of fiat money, right? We're going through a period that has no parallel in the history, in the known history of monetary policy, and rightly or wrongly, people are concerned about what might happen as a result of quantitative easing and other issues that are coming about, and are looking for alternative stores of value. You then have people who have assets in unstable locations, or dealing with governments that they may not be entirely enthusiastic, all right, about, and are trying to keep their assets away from those governments. So you see different motivations for the evolution of something like Bitcoin, and I'll leave the drug dealers out of the story for now, although I don't think as a practical matter you can leave them out entirely because of the nature of Bitcoin. One of the concerns I have that I'll get to is that there's something inherent and fundamental within Bitcoin that was essential to its evolution, but may limit its ultimate growth, and that's the anonymity point. We'll get to that in just a second. First, a couple of observations, very quickly. People talk about Bitcoin's transactions cost being really low. I don't think they're as low as you think they are once you take into account the possibility of theft. If you look at the publicly reported incidents of theft, back of the envelope estimate, 2 to 4% of all the Bitcoins that have ever been created have also been stolen. All right? That's over a 4-year history. As the value of Bitcoin increases, the incentive for people to figure out how to steal your Bitcoins will also go up. That means that to the extent that David, Fred, Nick, and others have come up with technologies that make it difficult or hopefully impossible for third parties to steal your Bitcoins, that's a hugely important intermediary service that these guys are performing, because absent something like that, to the extent that a Bitcoin is basically a code or a key that can be swiped, right, off of your computer, it's a little bit like, look, here's a cute little kitty on Snapchat, and poof, your Bitcoins are gone. All right, you're gonna want something a little bit more secure. All right, if that's how you're going to wind up making the mortgage payment. Second observation: Bitcoin is often called a currency. It's not a currency by any legal definition. It's not issued by a government. It's not legal tender anywhere in the world. All right, you can call it a cryptocurrency, whatever it is you want. But to a lawyer, we cringe when we hear people calling it a currency. It's something else that can act a lot like a currency, but it's not a currency. You look at it from an intellectual perspective. This is absolutely absolutely fascinating, because this is basically an unregulated space. This is going back to the notion of the state of nature that the British political philosophers of the 17th century would be talking about. And we're now in an environment where, you want to live in a totally libertarian kind of regime where, everybody makes the rules within the system and what have you. Great, that's terrific, until your Bitcoins are stolen. All right? Bitcoins are stolen. Who are you going to call? You dial 911. Hi, my Bitcoins are gone. Okay? Where do you go? So there's a reason why people created the state. Believe it or not, for all of the terrible flaws inherent in every state, there are often good reasons why they exist. Right? The state of nature, life was, brutal, nasty, and short. Okay, and your Bitcoin holdings can be too, unless you solve the security problem. We'll get back to David and Fred along this. Now, regulators are way behind the curve. Russ has made this point. That's exactly right. It's very important to observe that pricing in the Bitcoin market is extraordinarily sensitive to regulatory actions. The Chinese government sneezes, all right, issues a statement last week, 5 different agencies, basically explaining, hey, look, this stuff is a risky speculation, and the price of Bitcoin goes from $1,200 to $700 in one day. All right, that's a lot of volatility. All right, now then it goes back up the very next day by another $200, but that's a lot of movement. That comes just out of one regulatory observation.
9:35 as we walked into the room on Mt. Gox.
So you're on Mt. Gox?
Yeah.
All right, so you can get it like a ticker. You can actually follow it, all right, along with your Tesla shares and your Facebook shares, all right, and everything else. The other observation, liquidity in this market is very questionable. Best estimates are that approximately 65% of all of the Bitcoins, all right, that have been created are sitting in one place, and they don't really transact. They just sit there, acting purportedly as stores of value, but nobody really knows who's holding on to them. And if people would try to get liquid in this market, we have absolutely no idea of how this market would function in any kind of situation where you're trying to get liquidity. The market is also fundamentally schizophrenic in terms of the reasons that people state for its existence. It's a medium of exchange. You can buy a cup of coffee with it over at Coupa Cafe. It's also a store of value. You don't want to hold gold. You want to hold this instead. Well, unless you have a function like Fred talked about where, you can immediately transfer it into a value that you actually know, it's very hard for something with this level of price volatility to serve as an effective medium of exchange. Somebody's got to take the volatility risk out of it, and to the extent that there are intermediaries in the market that are willing to absorb that risk, they have to get paid for absorbing that risk, but it's very hard for any one thing to fulfill all of those obligations. Regulatory observation. What the hell is this thing? Well, under the federal securities laws, there's something that's known as an investment contract. There's a multi-part test for determining whether something's an investment contract. Typically, it involves an investment of money in a common enterprise with an expectation of profit and reliance on the effort of others. You apply that test to Bitcoin, and it would be very hard for the SEC to conclude that Bitcoin is not a security. And if the SEC concluded that Bitcoin is not a security, you would look at the SEC and you would say, okay, what part of the test, all right, does Bitcoin fail? Investment of money. Yes, and as a practical matter, the precedent says it doesn't have to be investment of money, investment of effort. Well, you bought the servers, and you had to pay for the electricity, and you're mining the Bitcoins. Gotcha, all right? Investment of money with an expectation of profit. Anybody on the panel know anybody that's ever bought a Bitcoin without an expectation of profit?
Definitely.
Really?
Yeah, if you're using it to transact in, of course.
Okay, but a large number of people are actually buying Bitcoins with an expectation of profit.
Absolutely.
Okay? So you've got an investment of money with an expectation of profit, all right, in a common enterprise. The interesting thing about the computer architecture behind Bitcoin is it's peer-to-peer. By nature, it's a common enterprise with something that lawyers call horizontal commonality. You've got a group of people and their machines working to generate this stuff. So you satisfy the horizontal commonality element of the legal test, all right? And this is the value in reliance on the effort of others. Well, again, the peer-to-peer nature of the network means you need other people to validate all of the transactions, and the only way you get value out of this, in effect, is because you've got other people on the network.
Can I ask a question? What defines an enterprise?
The definition is actually quite loose. It doesn't have to be a formal organization like a corporation, an LLC, a partnership, or anything like that. Any coming together of people with a sharing of assets. And the term investment contract, the courts will tell you, is specifically designed to be broad in order to be able to pick up new innovations that come to the market where investment capital is placed at risk.
So just as a thought experiment, apply that to the US dollar.
Oh, there's an exemption for the U.S. dollar.
Right.
There's a list of exemptions. I got it.
And foreign currency as well.
Foreign currency. Oh, yeah.
This is why it's important to decide whether Bitcoin is a currency or not.
Right.
Because there are exemptions from the securities laws
Absolutely.
for currencies.
Absolutely. There are whole sets of exemptions, all right? There are things that are securities, all right? And then even if something falls within the definition of security, there are all sorts of exemptions from that. And currency, clearly does not fall within the definition of a security. Right, and then you've got a separate, body of law about what's a commodity. You could argue but this is an issue that is currently unresolved, and I think one of the reasons why it's unresolved, with all due affection to my former agency, I don't know how many people there are in the building who really understand how Bitcoin works, all right, and could, tick down that checklist that way and ask the question, wait a minute, if this thing is not an investment contract, what does that mean for all sorts of other things?
Let me answer that question. I can tell you, based on experience, that roughly 6 months ago, it would have been very hard to find anyone in the federal government who really understood the underpinnings of Bitcoin. And they are racing now to catch up. The CFTC has said in several forums that it's under review, it's under study. FinCEN caught up with it maybe 5 months ago or so. They're working hard to figure out. They're still sending out letters asking people to describe to them what their activities are. Fred, I won't ask you if you got one, but we've got clients who've gotten one.
It's public that I've received one.
It's public, I thought so. That's right. But they're still trying to figure out what is this and what do the various players do? I mean, there are folks out there whose only role in Bitcoin is to have a software that helps send it from one place to another. And they're saying that's just back office stuff. But you're right. I mean, they don't have somebody who grew up that way.
Right, and they don't know how to think about it, and they're really trying to get their arms around it, and it's like they're trying to grab air.
Yeah, but to Russ's point before, this is not the first time that's happened in financial services or otherwise. It's often that technology outpaces regulation, and regulators work hard to catch up. And in fact, it's quite both admirable and surprising how quickly we're seeing regulators, not just in the U.S., but in many other countries, work to get up to speed
Germany.
on Bitcoin.
Yep.
And so far, I would say, from our perspective, regulators have engaged quite positively. Now, they have said, as the Chinese government did last week, there are limits to what we want to see happen in the short term while we're trying to figure out how to treat this, both as lawmakers and as regulators. But we do not see this as an evil. We see that there are both, like all new financial services and payment technologies, some positive aspects and some amazing things that some amazing innovation we might see from it, and the ability for people who have nefarious intentions to misuse it.
We've moved into the second phase,
Go right
Joe,
in
without
there.
ever having a segue. But yeah, I agree. And I think there were Senate hearings a couple of weeks ago, or congressional hearings, sorry, a couple of weeks ago, and the director of FinCEN came up and said, this could be a very positive development. And so this was not the federal regulators coming in and trashing it. And I'll tell you one place where it could. The Federal Reserve is pushing very hard at banks and others to come up with something that fixes the payment system, delays and costs and everything else. I'll bet the people who are more on the sort of strategic economic side are looking at Bitcoin and saying, is this something we could adapt to make those payments go faster and cheaper?
I think the basic technology underlying Bitcoin can absolutely be adapted, but the key interesting thing is the word adapt. Look at the Bitcoin network. Let's assume that David and Fred's companies are totally compliant, and they know all of their customers, all right? When they send a Bitcoin out into the world, do they know to whom it is going?
At the first level?
But do
Yeah.
you know the ultimate recipient of the Bitcoin?
We know who we're sending it to, just as a security transaction would work. If you're conducting it as a broker-dealer, a security transaction, cash for securities, you know who you're transacting with and have to comply with AML, KYC, Patriot Act regulations. Now, if they have nefarious intents to pass it along to someone else and they are not complying with those same regulation, that's fully possible.
And Joe, just to push back, when I walk to Bank of America or to an ATM and I take out $200, does anyone have any idea what I take that $200 and go and do? So the question of anonymity exists in some payment forms today. And in fact, Bitcoin is far less anonymous since the transaction graph is completely open for anyone who has the client and wants to download it to see.
I can
And I'm
feel
going to
Russ
push. I'm going to push.
chomping at the
That's
bit.
right. I'm going to push back
Yeah,
on your
of course,
pushback,
yeah.
which is, $200. Okay, I got $200 maybe in my wallet. If I go and take out 10,000, they have to report me. So there's at least a flag that goes up. If I try to carry around $10,000, ever since they did away with the $1,000 bill, that's going to be a hard thing to do. It's cumbersome.
Yeah.
I made this point at lunch today with some people who are interested.
So
It's cumbersome.
So what do cartels and terrorists use? Not U.S. dollars and euros?
It's the urban myth that every $100 bill in the United States has traces of cocaine on it.
Try putting cocaine on a Bitcoin.
I know. Well, and you read the stories, right?
It's awesome.
But no, I mean, if you go back to some of the anti-money laundering cases of the late 90s, whatever, I mean, yes, there were people carrying in suitcases full of cash from certain African countries, and, but those got picked up in a system that says, I know who came in and did that.
With the public ledger, I mean, we have Palantir, some great companies around here in the NSA, who could probably figure out exactly where everything is given enough time. So, I mean, in what you've heard a lot of people say, and including some of the government and regulatory officials, is to use Bitcoin for nefarious means and as a big-time criminal, you'd have to be very foolish. You have a footprint out there for all of time.
And to your point about suspicious activity and regulations that are in place, the banking level and the government level to protect against people moving large amounts of cash. I mean, Fred can speak to this more clearly, but in his KYC and AML policies, there are, they have already designed ahead of the regulation provisions for dealing with this, for filing SARs and for taking other precautions for people who are structuring or using other suspicious techniques.
And if Fred can lead similar like-minded people into the space, this is going to be something that's really going to take off. And you guys will make a lot of money and I'll make a little money. But
Agree. Like we were saying earlier, we view, and I'm sure these guys share the same opinion, is we want regulation. We're not of the mind that, hey, Bitcoin needs to be out there in the wild doing its own thing. We need clear regulation, but still regulation that allows it to grow as an open source innovation, but not no regulation.
Right.
I don't think very few people now in the Bitcoin space argue for no regulation.
Yeah. And I would just sort of make the analogy to the early days of the internet, right? You go back to, 1994, and it's hard to imagine now, but there were many policymakers who had sort of their arms up saying, there's child pornography and all these things, right? And this is dangerous and potentially needs to be stomped out. And you fast forward to today, and that seems absolutely insane. I think we're witnessing sort of the same evolution here, where fundamentally the system is extremely powerful, and with that power, it allows you to do things that you couldn't do before. And yeah, people who are crafty might use that for nefarious purposes at the outset, but ultimately it's something that, in my opinion, can't be stopped and fundamentally is good for society.
So, Fred, David, how do you guys make money on Bitcoin?
Sure. At the moment, we take a simple 1% when people convert dollars into and out of Bitcoin.
Okay, and then they sit in the wallet and there's no additional fee.
That's correct. Everything in the Bitcoin world is effectively free, by nature international, and virtually instant.
Okay, so it's 1% in, and do you pay anything to get the money out?
It's any time you convert, yes.
Okay, so it's 1% in and 1% out.
And to be fair, just like the early days of foreign exchange, these will be margins that will most certainly compress over time.
Okay, so in other words, the transactions cost there is like a load on a mutual fund, a 2% load, all right, and then you don't pay any other fees over whatever period you've got.
Right, but the sort of holy grail of all this, right, is that you don't continuously enter and exit the system. There are some cases today, think about remittance, where even constantly entering and exiting the system, it's still substantially cheaper. But the long run view of this is people keep, or businesses keep, some small percentage of their working capital, as it may be, or whatever, in Bitcoin, such that you achieve the efficiencies of this sort of frictionless payment world.
David, how do you guys make money?
Yeah, so similarly, Second Market makes money in a very similar capacity. Second Market is a traditional FINRA-regulated broker-dealer, also an SEC-registered alternative trading system, and it takes a simple brokerage fee on the way in and way, just like a transaction fee like a broker does in your Fidelity account to buy stocks, right? The Bitcoin Investment Trust, like the ETFs, the Spider Gold ETF, has an annual fee for administrative, custodian, safekeeping, and that's how the Bitcoin Investment Trust makes money.
And what are the levels of these fees currently?
Yeah, and similarly, there's a lot of operational, overhead that went into starting this up. So currently, it's 2% annual. On the Bitcoin Investment Trust side, and Second Market is currently not charging an inbound fee because as we build up assets, but anticipates charging a fee when the secondary market starts up of 1.5%. But similarly, as time goes on, those margins will get compressed.
So many of you in the room may not be aware of it, and I wonder how many people on the panel are aware of it, but there was actually a currency analyst at Merrill Lynch who came out with a report last week analyzing Bitcoin as though it were a currency or a stock, all right? And it's a 12-page report. Look for it on Google. You can all find it online. And he went through a variety of techniques, and he ballparked the current market value of Bitcoin at about $12 billion, which is not far off from its current, market cap. So he's saying Bitcoin is pretty close to fairly priced. Do you guys have any views on that?
Before,
Yeah, sure.
There was another one. I mean, yes, Bank of America, Merrill Lynch initiated coverage, and that was seen as a very positive thing for the Bitcoin. There was another analysis, though, about why the price keeps going up. It says one of the reasons the price keeps going up is there's no way to short Bitcoin at this point. And so those who are more skeptical can't get into the market to say, I don't think it's going to rise as much as you do. It's all a buyer's market feeding itself up.
Mm-hmm. Yeah, although I think you're seeing those financial innovations. There actually are a couple ways to short Bitcoin, but the counterparty risk is probably not something tolerable at this point in time. But you're starting to see folks pop up and create those financial innovations on top of it.
I would hate for this discussion to turn into a conversation about what the right price of Bitcoin would be, because I think it's a popular thing to talk about, but you can miss many of the important aspects of Bitcoin by speculating on the price. That said, I would express the belief that we are all arguing that Bitcoin is useful in a number of different ways, and Bitcoin is by definition scarce. There will only ever be 21 million Bitcoin, and Bitcoin's use value increases with the number of people who are in the system. It's hard to say exactly how many people have Bitcoin today, but it's probably in the $5 to $10 million people range. So anything that is useful and scarce by definition should have a price, and that price should increase with some elasticity according to its usefulness. And so there is, I think, a very strong argument, first of all, not to listen to banks and analysts at banks who have a tendency to get these things wrong, or anyone else who would prognosticate about the future price. And I think, secondly, we should acknowledge that if Bitcoin is as successful and becomes as widespread as it might, according to some of us on the panel, the price could conceivably be considerably higher than it is today.
So, Nick, I have to compliment you. That was one of the most well-articulated dodges that I've heard.
I think the price is going to go up.
He's done it before.
I was going to say.
He's done it before.
I knew. You wouldn't be at Ribbit, and you wouldn't be doing the deals that you're doing unless you thought the price. So, because.
But that's not how we're making money. You didn't ask me how we're making money.
How are you making money?
We have the good fortune of being invested with Fred.
You're making
us money.
Making money. That's exactly right. It's not complicated.
We're actually not making money on the appreciation of Bitcoin as an asset either.
Right.
We're making money on the service aspect.
Right. However, as Bitcoin grows, all right.
And Nick's right. There's a completely different analysis I saw that said you shouldn't look at Bitcoin as a commodity or something to price. What you really should look at it as is something that is going to completely transform, like the internet did with email, completely transform the way we do payments. And therefore it does have a very high potential value. If it comes and it sticks, if it's not beta, if it's VCR, we're in good shape.
Yeah, there's a professor at the GSB, Susan Athney, has spoken and written about this concept, which is, I think, maybe a useful concept to bring up here. People often talk about whether Bitcoin has intrinsic value, or if Bitcoin goes from 12 billion today to 100 billion in the future. One way of thinking about this is that we all believe Bitcoin is going to take a huge amount of cost and friction out of existing payment systems and encourage innovation and reallocate some wealth in the financial services industry. Buying a Bitcoin is buying a seat at that table of the distributed ledger system that Bitcoin is, and so people are paying a price to have a seat at that table. I'm not saying this is the right way of thinking about Bitcoin, but I'm just offering it as a way of understanding why Bitcoin in aggregate has value. And buying a Bitcoin in some ways is buying a share or a piece of the Bitcoin system overall. So one exciting thing about Bitcoin, as David and I were talking about before the panel, is Bitcoin has a lot of heft. It has a lot of believers. And these are, range from hedge fund managers to crypto anarchists to technologists who see the potential for this thing. All of those people are part of the global startup or enterprise, to use Joe's legalistic term, that is Bitcoin. And all those people support Bitcoin's usefulness and therefore its price.
Yeah, and that speaks to, we get asked a lot, could Bitcoin be Friendster or MySpace to the next cryptocurrencies, Facebook or Instagram? It really is a trust and a network system, and like Nick was saying, as more and more people get into it, there's an effect of it just being farther and farther ahead, and the folks who are invested into the space one way or the other want it to succeed. And it's important to note, even though it's Bitcoin 101, is that Bitcoin is an open source protocol that can change. So if new features in another coin are created that are deemed to be useful by the Bitcoin network, they can be adopted by the Bitcoin network. And so even though that's 101, it's important to keep note of, because Bitcoin now, has a market cap, enterprise value, monetary base, narrow money stock, M1, M2, M3, whatever you want to call it, of about $12 billion, whereas the next biggest alternative currency, I'm outdated in my figure now, but a billion tops for Litecoin, but I think less now.
I think it's helpful just in thinking not about what the right price of a Bitcoin should be at the moment, but in terms of what the actual intrinsic value of a Bitcoin is, to sort of look at the history of currency over time. So in making this very truncated, take gold, commodity-backed currency. That was sort of the origin of many currencies where the value was derived from the commodity itself, obviously gold in this case. For the last, 150, 200 years, we've been in this era of fiat currency where the value of the currency is derived from the full faith and credit of a sovereign entity. Now we're entering this era of digital currency, which is a bit of a radical shift in thought where, as Nick was kind of getting at, the value of Bitcoin, in my opinion, is the summation of the cost savings in making payments over the network over time. In other words, we were talking about the 3% tax that credit cards kind of enforce on all transactions. If you imagine that 3% over the course of all payments made with a Bitcoin, that sums up to something very large, and I think, in fact, is the value of the Bitcoin itself.
What do you think about, I'm interested about everyone, what they think about, you never hear really Bitcoin being termed in terms of its value as buying broad, bandwidth. Basically, if Bitcoin is the transaction network and each Bitcoin is like packets of data on that bandwidth, I mean, how do you guys think about it that way? That's something that I heard today earlier at a conference that I was interested in. I mean, does that make sense to talk about it that way? You're buying basically, it's like a toll road.
Bandwidth is valuable only because it does something. Bandwidth is useful because you can do a cell phone transmission over it. You can convey information. So bandwidth is valuable, in my view, only to the extent that you can convey information over the bandwidth.
But isn't that exactly what Bitcoin does?
But that's right. So the way I think about it is it's the value that's being conveyed, not so much the bandwidth.
And I find it interesting because it could be all of these things. It could be a currency. It could be a store of value. It could be any of these things. But if you think about that model where ownership of a Bitcoin is ownership of a part of the bandwidth of the system, ultimately the market will decide what it is based upon that. Whoever wants to buy Bitcoin and use it based on the protocol or the services that are built on the protocol, whoever owns more Bitcoin will determine how it's used and what it is. So it doesn't necessarily have to be regulatorily decided ahead of time.
So I want to shift gears a little bit. All of you have suggested that it would be great or good or better if there was an appropriate form of regulation of Bitcoin. That leaving Bitcoin out there in this brutal state of nature isn't necessarily the best thing for Bitcoin. How would you want to see it regulated? What would you like to have the authorities in the United States and in other countries do, other than adopt it as a currency and make it full faith and credit and the like?
Sure. So, and I've obviously encountered this quite a bit in running a service that actively sends and receives Bitcoins and converts them and all that good stuff. I think the Senate hearings were extremely positive to an extent that even I didn't expect. I think the optimal regulation here is one that makes it responsible. In other words, people like Coinbase who operate on top of Bitcoin can't do things that just blatantly sort of violate money laundering guidelines and allow sort of illicit activity to run rampant. At the same time, as Nick was talking about before, this is something that is very new. And with anything that's new, there are new benefits, just like the internet revolutionized the way we distribute data, that regulation should not stifle, and were it to, it would destroy some of the intrinsic value of the technology itself. That presents some interesting questions based on what's, so I've gone and talked to state regulators at this point who are regulating the money transmission aspect of this stuff, not so much the money laundering concern. It's more if you are a service that is moving money around, how do we know that consumers aren't going to lose out concern? And generally speaking, the conversations have been very positive, but there are strange things where they have these statutes on paper that say, these are the products we know, and Bitcoin kind of breaks all that. It's a round peg, square hole problem. A good example is there's sort of a clause called permissible securities or investments, depending on the state, where it effectively says if you have 1 unit of value, what can you hold against that 1 unit of value? So PayPal's example would be you have $1 in your account. Can you go buy Apple stock to back that? Probably not, because it's volatile and you could lose money and lose the consumer's money. in Bitcoin, this blew my mind when I learned of it, but if you're holding one Bitcoin based on what's on paper, it's not obvious that as an operator you can hold one Bitcoin against that, even though it's a one-for-one mapping and that's what the consumer expects, just because there is no conception of a Bitcoin as a permissible security. So long story short, there will need to be statutes that have significant guidance issued on them or entirely rewritten such that Bitcoin fits, and hopefully they don't try to shove it into other buckets such that the real underlying power of the protocol isn't diminished.
Have you thought of writing that statute?
I did my part in attempting to nudge it a little bit in the way that I thought was appropriate, sure.
Okay. Nick, are you thinking of supporting?
Yes,
an
and we
appropriate
have.
form?
We have actually. Ribbit has. Ribbit has invested. Mickey Malka, who I work with at Ribbit, is a founder of Ribbit, is on the Bitcoin Foundation. We're members of the Bitcoin Foundation. We've worked with a few law firms on, and in conjunction with the Bitcoin Foundation, putting together some initial legal briefings for members of Congress and other parts of the government. I mean, I guess what I would say overall about this is hundreds of thousands of hours or more of brain power and conversation and debate will be spent figuring out exactly how to regulate this. But with the exception of maybe a few people with the particular views, I think everyone in this room would agree that existing regulation of financial services of payments, some of it is good and protects us in the way that you suggest from the sort of harsh, brutal reality of the world without a state. And some of it is antiquated and has accumulated over a number of years, and there isn't wisdom in that piece. So having a new system like Bitcoin gives us an opportunity to rewrite the rules for this new system. And what do those rules look like? Well, basically, they're rules that help us catch bad guys, protect good guys, and preserve the innovation potential of the system and privacy. And so I use this as a moment to say what I think is the distinction between anonymity and privacy. Some people do care about the anonymity of Bitcoin, like some people care about the dark web and the really anonymous features of the internet. So I don't mean to discount that at all, but from my personal perspective, what's more important is privacy. When we make a payment today with a credit card company, that company, because it's a centralized form of payment, has a huge amount of information about us and about the things that we're spending our money on. When I go and buy a Bitcoin from Fred at Coinbase, and then I use that Bitcoin to spend it somewhere, as long as I'm using it in an appropriate way and I don't become subject to some sort of criminal activity, that record that Fred is keeping of who I am and the link to my Bitcoin wallet is never revealed. And unless a lawmaker with a sort of proper warrant and judicial process goes to figure out who I am with due process, I have and am entitled to complete privacy with respect to that payment. So I think Bitcoin can have huge value in terms of preserving privacy and giving people, not just in the U.S., but in other parts of the world where we have less liberty or where people have less liberty, the ability to communicate, and money is information and information is communication, the freedom of communication that we hold very dear in the U.S., and it can still be a tool that law enforcement uses to make sure bad guys aren't doing bad things.
So if I understand, your legislative proposal has three parts: catch the bad guys, protect the good guys, and have privacy.
And preserve innovation potential,
preserve
most
innovation.
importantly.
Yeah. So the dark side of privacy, in a certain sense, is, let's just say, tax evasion. That if you have the kind of privacy that you just described, this becomes a fantastic engine for tax evasion because it's non-auditable.
Well, or it's perfectly auditable, because every transaction is part of the blockchain. Every Bitcoin transaction, you can go and look, and you can see the entire history of that Bitcoin transaction back to the Genesis block.
But you don't know the names of the people. You know the numbers of the nodes. You know the code to the node, but you don't know the name that's associated with that code.
You do if they're taking it into the traditional banking system, right? Because you buy and sell, and that's how we catch a lot of things is coming into the banking fold. And so if somebody through Coinbase sells a coin and links their bank account, it goes to their bank account, and that obviously
and you can trace that.
Yeah.
But there are other nodes that you can't trace.
Absolutely. And speaking of the tax part, selfishly, the regulation that I want is favorable tax treatment. Like Germany came out and they said, hey, first of all, they were clear, this is how we're going to tax it.
Who do you think you are, Amazon, that you want favorable tax treatment? Come on.
I wish I was. They came out and they said, hey, here's how we're going to tax it, but we're also going to have a favorable long-term treatment as well. So that's a pretty interesting idea, and selfishly, that's what I would want.
Right. Favorable long-term capital gains rates. Right. Yeah. Why don't we turn to the audience? My guess is that there are probably a bunch of questions. Right over here.
So the title of this event was "The Trail of Fad." I believe none of you actually believe it's a fad. That's my first question. Second, I think a question for you. You mentioned $21 million being the max for Bitcoin. When I was reading about it in preparation coming for this event, I saw something called mining for Bitcoin. Can you relate the two concepts?
So let me try to repeat the question so everybody can hear and we get it on the record. When we announced this program, question was, future of money or a fad. And the question is, gee, it seems like nobody thinks that this is a fad. All right, so we'll go to the fad part of it. And that you've also read about this phenomenon called mining bitcoins. What's that all about? All right, how does that aspect of it work? Who wants to take on the fad part of it?
Sure.
Yeah, I would say.
Is this a fad? Absolutely not, in my opinion. So we talked a lot about transactional savings. I'll try to give a couple high-level examples about why I think Bitcoin is significantly better than the next best alternative and why I think it'll stay that way. So we talked about credit card fees. Another aspect of that is international fraud detection. Oftentimes causes retailers to lose roughly 10% of their sales because of false positives on fraud. Another huge thing in this, which I think is extremely interesting, is if you look back at the genesis of the internet and the web browser, there's this error in the web browser called the 402 error. It's called, the error message associated with that is payment required. And one of the sort of original sins of the internet, if you will, is that there are no embedded economics in the internet. There are no payments that are native to the internet. And that has caused all sorts of tragedy of the commons problems, effectively. So think about spam email. If it took a fraction of a cent to send an email, which nobody in this room would care about, spam email would be dead overnight. The same thing with access to any kind of limited resource. Downloading a file, denial of service attacks, all of these problems, which have been very costly to the internet and extremely costly to stamp out, and there aren't perfect solutions even to any of them now, would be gone overnight. So to me, that's a very convincing, more protocol argument for why Bitcoin as a programmable currency solves problems that nothing else can, rather than the sort of grafted on payment methods that we have with credit cards or PayPal, whatever it may be.
You should mention microtransactions in that.
Oh yeah. Okay. So two other big ones in my opinion. Microtransactions. So this has been a huge problem in payments for a very long time. There's no great way to send a very small payment. Oftentimes, credit cards will have base fees of 15 to 20 cents. So if you're buying something that's $1 on the internet, let's say you're buying like a tractor for your Zynga Farmville farm, they don't care because the marginal cost of that product is often zero because it's a digital product. But for real goods, that doesn't make any sense. It's 20% of your revenue out the door right away. Bitcoin is a programmable currency. It's just like you loading a website in your browser. The cost is next to zero, and as a result, you can send a fraction of a cent rather than having to deal with these weird edge cases when you get below $1. The final thing I think this will do, so I used to, full disclosure, I used to trade foreign currency on Wall Street. I think it'll largely democratize foreign exchange and remittance. Rather than having to go through these systems like Western Union where one company owns this big black box and they make all their money on owning the network that by nature is not open, you have this system where, and this is already happening all around the world, local exchanges will crop up, they'll become more liquid as they already are, and it's very transparent that if you're going, let's say, from the US to China, that in the US there's an exchange that charges me this fee and there's this bid offer spread, and in China there's an exchange that has this fee and this bid offer spread, and in summation, that's the cost of sending money from the United States to China. That fee over time will reach an economically efficient frontier that will be dramatically lower because it is an open system on which anybody can build that is way lower than Western Union. So for all those reasons, I think it is significantly better than other alternatives. in a fundamental, open way that is going to be very hard to beat.
I would add a macro political one too, just to put it in there. I mean, as you mentioned earlier, all the political and economic instability in the world is helping fuel kind of excitement in corridors. You know, certainly in places like Argentina and Cyprus, that we take for granted in America that I can have $1, and tomorrow the dollar will be worth about what that dollar was worth, and I can buy the same kind of stuff. That's not always the case in a lot of places, and certainly with increasing frequency, we've seen major systemic risks causing people to call into question whether governments should have a monopoly on money.
Yes, sir.
On the competition, for everything like second world you mentioned is a second market is a second world from China, for example. Every company that you start has a Baidu there is a Tencent and so on, and they don't want to use what we are using. Right? So what is your take on it, and how are you working on it?
I mean, so those are, I think there are two fundamentally different things there.
Yeah.
There is Bitcoin as an open system, and there are 10 different Bitcoin exchanges that operate in China at the moment. And there are companies which build a layer on top of Bitcoin, which the second market in the Bitcoin Investment Trust is one, and Coinbase is one. I'm sure they will have, and they already do have, sort of homegrown options for that layer on top, which very well could not be us. I'd love to enter China, but I'm scared out of my mind to do so. But that doesn't mean that Bitcoin won't be successful there. In fact, it already is very successful.
Yeah, I mean, that's true of every single industry in every single sector.
Everywhere in the world, right?
Yes, sir.
So, can you speak a little bit about the limit of the number of Bitcoin that's going to be available and how that impacts the whole system? Because it, limited systems to drive the price up, obviously, versus divisible, infinitely divisible amounts of Bitcoin, and how that sort of impacts the whole market transaction.
So let me repeat the question. There is, in theory, a finite number of Bitcoins that will ever be created, but each Bitcoin can be subdivided into very, 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 very small pieces. I think the question is, explain how that works.
And what's the value of doing that? What's the purpose of the
And I'm sorry, what's the purpose of limiting?
Purpose of limiting,
Yeah, what's the purpose?
How do we know that someday it doesn't someday go out? Something more money.
Satoshi says there can be 25 million or 30 million. I'm a skeptic.
So two separate questions there. How do we know that someday the total number of Bitcoin, which is today around 12 million, but is capped, I think 2140 is when the last Bitcoin is meant to be mined at 21 million. So that's one question. That's a technical or a technology question. And then separately, what are the implications of having a system of money where the good is perfectly scarce? Because even something that's very scarce like gold, we add 1.5% or something like that to the supply of gold every year. On the first question, and we could discuss in greater depth after this if anyone is interested about how Bitcoin specifically works, but basically it's mathematically impossible under the current version of the software, which is open source and is used by the majority of has to be used by the majority of the nodes on the Bitcoin peer-to-peer network to create more than 21 million Bitcoin. Now, there are some known technical issues with Bitcoin, like if you control, people talk about the 51% problem. If you control more than 51% of the resources on the Bitcoin network, you could mine a block, you could basically scramble the ledger and create a ledger that doesn't represent an accurate representation of all, or accurate picture of all previous transactions. It's very expensive. I mean, it would cost tens of billions of dollars today by most people's estimates to amass that amount of computing power, given how much computing power is currently on the network. But there are also, there are unknown unknowns from a technological, from a technology standpoint. And I wouldn't pretend to tell you that there's...
So I think the other important piece of that, too, is if you truly did have enough computing power to control the network, you'd be incentivized to not screw it up. You'd actually profit more from mining Bitcoin, accumulating wealth that way, than compromising the network and effectively flushing the value to zero because you've compromised the network and nobody wants to use it anymore. So fundamentally, there's a mechanism sort of built in there.
And then quickly on your second point, sorry, did you want to amend? So what was the purpose of that? I think if you go back and read Satoshi Nakamoto, who's the synonymous or anonymous creator of Bitcoin, you read what he wrote at the time. There was a clear frustration with current systems of fiat money where central banks would print a huge amount of currency and could debase the currency. A U.S. dollar, 100 years ago has lost over 98% of its value today. So even though we live in a relatively stable monetary regime where we trust the currency of record as a store of value, over time that dissipates. And certainly in places like Zimbabwe or Argentina where you have hyperinflation, there's a desire for this kind of stability. Now, people have talked about whether Bitcoin is deflationary because people will be incented to hoard it because of the limited number. I think this is a first of its kind economic experiment, and we don't know. I mean, I could give you very strong arguments for why people will eventually spend Bitcoin because they have different risk preferences, and as the price goes up, they're incentivized to spend it, or why people may hoard it, and we'll see over time. But I think the idea was protecting the integrity of the system was important, and that's why there are only ever going to be 21 million.
Yes, sir.
Yeah, I actually disagree with you. You're actually about 1/3 of all the coins are being hoarded right now. So Gresham's law is running after you, pure and simple, at this point. That is a very large amount of this is actually just being, the velocity of the money that you're talking about, Bitcoin, is actually being stifled because of the fact that...
How many dollars are not just sitting still? I actually don't know. Do you know how many dollars are just sitting in bank vaults or in the Fed?
That's a different question. Irrelevant. You can talk about that offline.
Good response.
Professor.
In order for Bitcoin to actually
Pretty deflective.
make it over the hump, there has to be the velocity of Bitcoin
Has to increase.
has to increase dramatically. And right now, Gresham's law says that the value is so much higher than the dollar and euro that people will have this natural tendency to hoard psychologically. So you're in a major psychological fight here with this.
Okay, so first of all, the actual exchange rate doesn't really matter compared to the dollar, right? I mean, it's like 100 yen to the dollar. That part is irrelevant. The part that I think really matters here, and I think you're correct in sort of the base of what you're saying, but I think we will evolve out of it. So at the moment, I see 80% of Bitcoin purchases and sales is speculative. That's kind of where we are in the evolution. 20% is probably used for real commerce. That balance over time, I think, will shift for the reasons that I described earlier because of the real transactional efficiencies that Bitcoin actually brings. I want to say one other thing, too.
Well, I mean, the way I look at it is a little bit different. It appears to me that the Bitcoin market is now segmented in two. You've got Bitcoins that are sitting, hopefully, in vaults safely, all right? But lots of people are busy at work trying to steal, all right, those Bitcoins. And the latest numbers in the literature suggest that's about 65% of all the Bitcoins that have been created. And those are low-velocity Bitcoins.
But just to qualify that a little bit, there's research. It's not that they're literally being hoarded. It's that there are many Bitcoin which are quote-unquote lost, to which the private keys have been lost and they're just sitting on the network. But it's not as if people are actively hoarding them.
So we don't know. So there's a number, 65%. That includes people who have it at Coinbase, all right, or at Bitcoin Investment Trust, where they haven't lost it, they are hoarding it, they're holding on to it, they're not transacting their stuff very frequently, all right, for many of your clients. But there are other accounts out there that tend to be high-velocity Bitcoins that turn over, on Satoshi Dice, or all sorts of other things for illicit purposes or what have you, that don't interact with the Bitcoins that appear to be sitting in one location. And this is the other interesting question. We don't really know the total number of useful Bitcoins that are out there, all right? We know the number of Bitcoins that have been mined and have been issued. Well, that's the point.
Okay, let me address a couple fundamental things here.
So we don't really, because we don't know how many have had their keys lost. Go ahead, Fred.
So the prior gentleman brought this up, but we didn't answer it. So yes, there is a cap at 21 million Bitcoin, but they're also subdivisible down to 8 decimal places, such that there could be, I haven't market sized it recently, but there could be 100,000 Bitcoin in existence, and that could still feasibly service the entire transactional volume that would ever be needed. So that itself is not an issue. The other argument I'll make towards the money velocity thing, think about purchasing a computer. Moore's law dictates that the cost of computing power gets cut in half every 18 months and doubles, such that somebody who's economically rational would not buy a computer now knowing that future expectation. That being said, there is sufficient utility in buying that computer now to not perpetually wait to buy a computer. The same economic argument can be applied here. If there are truly scenarios where the cost of making a transaction dictates that it's better to use that Bitcoin now, and I tried to talk about a couple of them, rather than waiting for appreciation and hoarding in the future, I think that's where we're going. At the moment, the infrastructure is still being built such that those use cases that I talked about where it's significantly better than the next best alternative haven't really flourished yet. But I think once that does happen and once the infrastructure is better built out, there will be sufficient utility to spend the Bitcoin rather than hoard it.
But that's the critical point, just to respond really quickly to you, because you raise very good points. And Joe brought up volatility earlier. Volatility and velocity are both real issues with Bitcoin today. But we just have to remember that Bitcoin is in its infancy, and what we're talking about is a system that has enormous potential. So if Monica Seles and Michael Jordan had a baby, you wouldn't look at that baby and say, oh, what a great jump shot. You'd look at that baby and say, that baby could be a great athlete someday. So Bitcoin today. It's a weird analogy. It's a weird analogy, guys.
You want to interrupt me again over there?
But I'll come back to the point I made earlier, which is my college senior daughter who suddenly discovers there's a Subway shop that'll take Bitcoin. Now, until there's 10 such businesses and she can buy whatever in the groceries and whatever, I'm not putting her allowance into Bitcoin. It just isn't going to work. But the merchant acceptance has got to be a factor.
This is why you're a lawyer and not a venture capitalist.
You mean I should buy some Bitcoin and hoard it?
Absolutely right. No, that is the next wave, and that's what's coming in the next
That's what you're right. Yeah.
This is the question is not are subways accepting Bitcoins now? What do you think about the probability that subways in 5 years will be taking Bitcoin?
But then I'd be buying my Bitcoins and hoarding them for 5 years until they really are a measure of value.
Sounds like a good plan
Yes,
to
sir.
me.
Until Subway charges 3% for the credit card fee.
I'm sorry. I didn't get
What's the advantage of Bitcoin over some other electronic mechanism?
Every other one?
Yeah, go for it.
There are a lot of people in the Bitcoin community who are also gold bugs, who believe gold is a very attractive investment. So you could say, I can make the argument that Bitcoin is better. People talk about why gold is attractive. It's scarce, it's durable, it's fungible, it's divisible, it's verifiable. I forget, there's one more characteristic of gold or of money that people cite. Bitcoin is better than gold on all of those dimensions if you kind of tick them off one by one. So maybe because it's better than gold, or maybe just because it's different. So from a diversification standpoint, it would be interesting to hold Bitcoin as a part of your portfolio. But I don't think you'll hear anybody here say, don't invest in gold. I mean, that's more of a question for an investment advisor.
This is not a big government or some very large corporation has tremendous computing resources to go in and just mine all of Bitcoin. I mean, we could put NSA to really good use right now.
So again,
Bring down the deficit.
what's to prevent some large enterprise from putting a lot of computer resources to work to mine all the Bitcoins? Gentlemen?
Let them. Why not? Are you talking about getting Bitcoin or getting over 51% of the computing power?
Well, actually, if you line it up, can't you get
First of all, if they want to invest more resources into the Bitcoin system to get Bitcoin, yeah, by all means, it's a market system and an incentive-based system, so they should get those more Bitcoin. If you're talking about the 51% attack, it's a Goldfinger problem of spending so much money only to destroy the entire system that you now have so much money in. So no one is incented to do that except to destroy. So that someone could do that, but only in order to destroy, not to hijack. Because by destroying trust in the system, your investment is worthless.
Young lady?
So
Could you repeat the question? Because all I heard was Winklevoss.
it's about as you, yeah. People have strong reactions to them. So you may have seen that the Winklevoss or the Winklevi have registered an S1 for a product that's similar to the Bitcoin investment trust, structured like an ETF, and it's currently just sitting there. Reference was made to some rule that may need to be passed. I'm unfamiliar with what rule that may be, but obviously we're very familiar with that situation and how it's progressing. Maybe you're talking about kind of there's like an exemption for getting ETF products approved and into the marketplace, but it's very challenging to get an ETF product approved these days by the SEC. To give you some sense, the same product that holds just copper, which we think of as a pretty kind of standard commodity, took about 3.5 years to get approved by the SEC. Because of the Jobs Act and the lift of the ban of general solicitation, that's why we chose to keep ours in the private space so that, and still take advantage of being able to speak publicly about it. The other thing is that we don't want to be out there encouraging retail investors to invest in something that is to some extent speculative and certainly very volatile in price. So ours is available only to accredited investors and qualified investors who can afford to lose that much money. So I'm not sure if
who have read through about 40 pages of risk factors and agreed that they can terminate if any regulatory thing happens that goes the wrong way.
You can blame my general counsel.
It's all good stuff. And who had to put up about 3 default ways of valuing the trust.
Yeah.
If this wasn't happening, then we go to version 2. I mean, I had the pleasure.
Does that answer anything that you asked, or no? Some.
No, not really. Yes, sir, in back.
Given that this is money over IP, Internet Protocol, which is what the Bitcoin protocol is, how does one have to think about the regulatory landscape, given that this is now transitioned and goes across borders? Internet has no borders. And we think about it in terms of sovereign nation regulatory landscape. But companies, hopefully, will have to think about it international in nature rather than in one country.
So to repeat the question, how do you approach the problem given the fact that this is a peer-to-peer network and therefore it really knows no national boundaries? The idea of having one country regulate this system makes no sense. What you can do is you can regulate the people that interact with the system within your jurisdiction. So China's government will be able to interact people who take money into and out of Bitcoin if they are in China. Japan will be able to do the same if they are in Japan. United States the same, but nobody really gets to regulate the thing, all right, unless the miners participating in Bitcoin decide they want to change the rules. So from that perspective, Bitcoin is really unregulable by any government. Is that about right?
I think that you're right. The whole thing is, in some ways, securities are like that. What you do have to keep in mind is that the U.S. asserts a jurisdiction over anyone wherever they are located if they use means of communication in the United States. So, for instance, Liberty Reserve, which is in Costa Rica, but by reaching into the United States, the U.S. asserts jurisdiction over that. But we can't influence, as Joe said, we can't influence what China has just come out with, which is to say to their financial institutions, don't deal with this. Individuals, you can do what you want, but the financial institutions can't deal with it. The U.S.'s way of doing that is just not to tell the banks, don't give anybody a bank account if you're doing anything with Bitcoin.
Except for us.
Except for you. I mean, we have clients, very difficult for them to get bank accounts. The minute they say we're doing anything with Bitcoin, even if it is only doing a version of Yelp about businesses that will take Bitcoin.
There are banks out there, but nobody wants to put their hand up and say, I'm
open for business, yes.
Right. And isn't that a big problem as a practical
It is a
matter?
big problem.
It is.
Yeah, huge. Sorry. Would you call it?
The woman in the pink sweater. Yeah.
How many pink sweaters?
Comparison between Bitcoin and other similar products like Litecoin. And another question is related to, you mentioned that because of the limited supply of Bitcoin, that it has an advantage over the fiat money. But what if we can have unlimited products, common products like Bitcoin, like say Bitcoin, Litecoin, and other coins that add up? We still have unlimited supply, right?
Yeah.
So again, to repeat the question for the record, there are other cryptocurrencies out there, Litecoin and others, and there's an infinite supply of currency systems that are identical or trivially different from Bitcoin. And although there may be only 21 million Bitcoins that will ever exist, assuming the algorithm is right, you could have 21 million other types of Bitcoin. So isn't there really an infinite supply of cryptocurrency?
Cryptocurrency or Bitcoin is only useful because people use it. And so what I would say generally, if you look at Bitcoin as a protocol, the hard problem is not creating new technology. The hard problem is getting adoption. Fred could probably in 5 hours whip up a new SMTP, but it doesn't matter because SMTP has been used for the last 20 years for email. So what I would say is Bitcoin is adding more users per day than the next, I think probably than the next biggest altcoin has in total. There is a more nuanced view to this, but I would suggest that it's game over. Bitcoin has, unless there's a technical flaw, has the early lead, and that leads to a network effect, and it'd be very hard to replicate that.
This part of the room has been underrepresented. Yes, sir.
So following up on the jurisdiction question, there are 48, 47, 48, and becomes law, state laws that regulate money transmission. So Coinbase, to pick on that because they're on the panel, is told FinCEN that they're doing business in every state. They have 0 state licenses. So for legislative proposals, would you support the existing state regime, or do you think a federal regime would be more beneficial, or what should be done?
Sorry, what's your? Are you Aaron? I am. How are you? So Aaron brings up a very good point. The state licensing process is very cumbersome for an early stage company. It's one in which, as Aaron pointed out, you have to go get registered in, depending on your business, 47 or 48 separate states. And for an early stage company like us, that is a lot to do, and it's very costly. The reality of where Bitcoin is with states at the moment is it's very much in a gray area, where states, those who historically have been more forward-thinking, like New York and California, have very actively thought about and are likely going to be the bellwethers as to how all of this shakes out as it pertains to money transmission. My personal view, in having spoken with some of these regulators, is that they're thinking about it in a shockingly thoughtful way, and that it will, by whatever definition one would like to apply, it will go well and there will be no nefarious action taken. That being said, as an owner-operator, I would greatly prefer that such a process was more streamlined. And this sort of goes back to how is all this going to be regulated in the first place, but my hope is that they will do so in an intelligent manner, which does not squash innovation.
We're going to take one last question. Yes, sir.
On the surface, it looks as if Bitcoin is inherently deflationary.
A little bit louder so everybody can hear.
On the surface, it looks as if Bitcoin is inherently deflationary. 21 million finite units. Human error probably going to use keys. The question is, for clarification from Fred, you say that the value of Bitcoin could be the sum of all transactions saving. So that's taken into account that there would be an arc as the savings compress because of the ubiquity of Bitcoin being used would actually become inflationary. Is that correct?
Could somebody repeat the question for?
I got to think about that for a second. He basically is saying Bitcoin by nature is deflationary because there's a restricted supply, and as more people enter the system, there will be, the price will go up effectively because there's a limited supply and more people are entering the system, just like if there was a limited supply of oil in the world and people needed to keep buying it.
Coupled with human error.
Sure. Coupled with human error in this case. I think the embedded question in this is if margins compress over time such that Bitcoin becomes so ubiquitous that the cost savings goes down because everybody is using Bitcoin, does it then become inflationary?
It would be an arc. It would be an arc where you go from deflationary structure to inflationary structure. That's the revolution.
Maybe.
It's a good thing for an academic to study.
Yeah, frankly speaking, I need to think about that more.
All of a sudden, everybody's looking at me. I don't know about that.
Yeah.
John will tell you later.
So, look, A, it's an interesting question. B, it assumes that if you ever reach that kind of a tipping point, people won't race to create Bitcoin too. All right? And that appears to be far enough off in the future, given the current pace at which things are moving, that you'll probably have a whole bunch of other things change before we'd be able to, but I think as a theoretical matter, that's a very interesting.
I think the entire premise is really what is the cost savings versus the next best alternative, right? So the next best alternative has to become closer, lack of a better way to say it, for that to become the case, right. I think, as well, right?
Yeah, which means that, which goes back to the young lady's other question, that there may in the future then be a real economic need. If you run up into that kind of capacity constraint on Bitcoin, you then would have Bitcoin 2 or Litecoin or something like that. But in the current phase, I understand your argument, there are tremendous network economies of scale and scope to everybody staying within the Bitcoin regime. I get that. Ladies and gentlemen, we're at the end of our time. You've been absolutely terrific. I'd like to thank the panelists. I think they've been great.